tech names will lead the NASDAQ its next leg higher.
Let's bring in Ari Zoldan from Quantum Networks and Matt McCormick from Ball and Gainer. Welcome, guys. And,
Hi, how are you?
Ari, I like your note here because you say I'm always bullish on tech. The NASDAQ, though, has been probably the most volatile of the indexes. So what's an investor to do next?
Well, look, these are long-term. I mean, you're talking about the brick and mortar of yesterday, right? So we have Cisco, we have Google, we have Verizon, we have the companies that are building the foundations for tomorrow. So to not be bullish on tech is, I think, absolutely crazy. I mean, these are stocks that are in the fabric of our life every single day.
Do you think, just following up on that, Ari, that the NASDAQ its behavior in the future will look like its behavior in the past? Or are you arguing that if tech is getting boring to some extent, if it's the new bricks and mortar, that this index perhaps does act more staid?
No, what I'm trying to say is that I think it's the brick and mortar of yesterday where I think the industry, especially the street, as I mentioned earlier, the street I think is still getting comfortable with technology as a blue chip stock because they're still not familiar really how technology works, how technology is going to evolve. But I think once they do get it, and I think it's going to take a while, I think things will stabilize.
Matt, you want to weigh in on that? And also, as you look at the tech landscape, some of the stocks that have done the best this year, Intel, for example, is up more than 30%. There's Microsoft, there's Hewlett-Packard, there are others. Is it going to be a so-called old tech-led next leg of the NASDAQ's move?
I believe Ari is correct. I believe it is an old tech play. When you look at many of these names, many of them used to not pay a dividend. If they did, they didn't grow it, and now they've drank the dividend Kool-Aid. And you're seeing companies that are not only increasing their dividend, but they're doing it substantially. Qualcomm has increased their dividend 60% in the last 2 years. You're seeing companies as a sector. Tech has the strongest free cash flow, the lowest debt, the second lowest payout ratio, and the second lowest dividend yield. So they have ample firepower to give more income to people in case volatility gets increases, or just because they offer great innovative plays. I think Apple's the way to play. I like Microsoft. I like Qualcomm. I like companies that pay a dividend. I think technology is the best sector now, as well as the future for innovation and income growth.
I agree. Matt, if I could just butt in here a second. How about the backbone of technology? Companies like Cisco, like Intel, like Juniper Networks, like Dell. I mean, those are companies that are not so much on the radar of the everyday investor, and people need to start looking at that very slim specific sector because it's stuff that powers the internet and powers every single thing that we do.
But yet you guys disagree. You guys disagree on Facebook. So we have an old tech conversation, then we morph into where these so-called new technology stocks are going to take us. Why do you dislike Facebook, Matt?
Sure. Well, you're looking at the valuation that trailing it's, roughly 80 times trailing. It doesn't pay a dividend. And, according to my interns, Ian and Connor, kids today don't use Facebook as much. So I look at something that has sky-high valuations, doesn't have a PE. The kids today aren't using it. And it's not a backbone of the tech world. I like Intel, I like Microsoft, I like Apple, but Facebook is not a backbone.
No one said it was a backbone. I'm talking about companies like Cisco and Intel. Those are backbones of the internet world. In terms of,
I agree absolutely.
In terms of Kelly Scott, in terms of Facebook, I mean, they really haven't scratched the surface. I mean, they have a billion users. Their ad dollars are going at, I mean, they're absolutely insane what's happening. And I think what's going to happen, yes, Matt is right. I think people are getting a little bit bored of Facebook, but Facebook, again, with its acquisitions of Snapchat.
According to what? I mean, the most recent quarter, they knocked the ball out of the park. The stock's up 38% year to date. I mean, the types of stats that you guys are citing seem to be off base. I mean, they were the things that were talked about 2 quarters ago.
Let's look at Apple at 16 times trailing.
Twitter.
Yeah,
excuse me?
They're using Twitter, but look at Apple at 16 times trailing. That's below market multiple. It has the mother of all upgrades coming out and the iWatch. You have a Catalyst, and it's cheap, and it's paying you 1.9%. Apple all day long.
Yeah, but but what you're doing is that you're comparing Apple, no pun intended.
You're comparing apples to oranges.
Yeah. You're comparing apples with oranges.
Just to be clear, you guys agree on old tech. You agree on old tech. You both like it. You're split on new tech. Ari, you like some of these names. You think Facebook's the future. Matt,
yeah, and
you're
how about
not
LinkedIn?
so sure.
Kelly, how about LinkedIn?
What about BioTech, just to kind of hit the third part of this index that people need to understand if they're going to play it here? What about BioTech? Where do you guys stand on that?
I love the biotech sector. Again, it comes down like everything, comes down to the product and the management. You know, if you have a shoddy product and a shoddy management, it's not going to do anything. But in terms of the future of technology within the medical space, of course, it's all about biotechnology.
Okay,
That's
Matt,
not even a question.
what about biotech for investors who, you know, look at the recent volatility there and aren't sure they can stomach the NASDAQ?
I think you need to be selective, but we're a dividend shop, Kelly. I like Amgen. I like J&J as a healthcare mutual fund. I think those areas have had a great run. I'm a little bit concerned about the toppiness of the market. The guys have had a great one, whether it be the Facebooks or the biotechs that have sky-high PEs. I think they will be a source of funds if we see volatility pick up. That's why I like companies with reasonable valuations and strong dividend growth.
So you don't like
tech.
Amazon then, Matt? You don't like Amazon?
Hell no, excuse me, no way. That you have a look at a company that's like 853 times trailing without a dividend, doesn't make money. It's really cool, but it's way expensive.
For the record, granted, I do agree with Matt. It is expensive. It's not profitable. But Amazon's goal is not to reach profitability in the short term. They want to own everything and anybody. So I think once they do that, they're going to be focused on profitability. But you know, they want to be the internet of everything. They want to have, you know, drones deliveries to your doorstep. So I'm pretty bullish on Amazon.
Thanks, guys.